Hey guys, welcome back to the show. It's Everything Money. I'm your handsome and debonair host, Captain Seth. I'm here with Uncle Paul, my dear consigliere, my friend, and I'll get to him in a minute. But we're here today because the patrons that we adore and love with our whole heart as it thumps in my chest, I always ask a great question, and it's a very beginner question. When do I sell a stock? I'm also confused as well. My role in the show is to play that dummy. I do it really well, but I play the role of a viewer and you, a guy learning from a multi-gazillionaire about how to buy, what to buy. If you feel alone in this journey, I'm glad you found us. But today we're talking about when to sell. So maybe we've made some gains, maybe we've made some losses, unfortunately, with you GameStop people out there. If you're in the riskier stocks, you might be in this boat. So when to sell, whether we're high or low, how to take profits is all sort of a confusing.
Are you high?
I might be right now. I was sniffing glue in the parking lot, but I welcome in Paul. Gabriel, it's Paul, right? Yes. I welcome in Paul to enlighten us on when we should sell a stock. Hello, Paul.
Hi. So it's not a rookie question. It's not a beginner question. It's one of the hardest things that investors have to decide is when to sell stock. There are multiple ways to do this. Now, remember, on this channel, we talk about fundamentals. We talk about momentum. We talk about charts. We talk about options, etc. Every single one of those has a different time to sell, but the whole point is staying disciplined to a certain approach of how you sell. For example, Trader Mo talks about charts. He is going to show you on a chart when you buy and you exit a trade, right? Yeah, there are certain parameters.
Trader Mo is the third member of our channel who talks about momentum trading, day trading, so you can follow his videos in the morning. But keep going, Paul.
So when it comes to fundamentals, you've seen our videos. If you haven't, go back and look at another video about an individual company. When it comes to fundamentals, you're determining a price for the company, right? You're doing all your valuation. You're doing your valuation. You're doing all the numbers and determining, I think company X is worth $30 a share. Great. If it's selling for 20 right now, some of you would say, well, when it hits 30, do I sell it? Not necessarily. If it takes 2 years to hit 30, in that time period, what could have happened? The company could have gotten better. It could have gone and doubled their sales or increased their sales by 30% and had some nice boom. Now, all of a sudden, you think the company's worth $40 a share. That's what you need to watch for. As you're buying, you pick a price in the future that if the next day the stock hit that price, you're selling. But as it takes time, fundamentals can get better. And as fundamentals get better, the value gets better, right?
I think normal people, Paul, just think, again, I was in this boat for a long time, and you might be as a viewer, is I only buy and sell stocks based on their current or foreseeable future price. And so what we teach on this channel is far deeper than just looking at the current stock price.
What we teach on this aspect of the channel.
Go on.
The fundamentals aspect is sticking to the fundamentals of the company. Profit, revenue, shares outstanding, cash flow, things like that. In that regard, you need to determine what you think the company is worth and sell when it hits that price. When it comes to momentum, a lot of people will do what's called a trailing stop. They'll sit there and say, listen, I'm going to ride this thing up. But the second the stock pulls back 8% from its high, I'm selling. That's called a trailing stop. That works. There's a lot of successful traders out there, but you got to be disciplined. You can't use emotion to go, well, the stock's doing really well. I think it's going to go up. But nope, when the second hits, whatever percent you pick, you're out. I'm okay with that. That's a wonderful way in which to trade momentum. But from a fundamental standpoint, if the stock goes from $20 to 10, you still think it's worth 30 as you do your analysis over and over again. Then you just have to wait for it to hit 30. And when it hits 30, let's say it takes 2 years, now it's worth 40. Now you're forgetting about 30 completely and you're going to wait till 40 hits, right? That's the point of the fundamental aspect of investing. The day trading with charts and momentum is totally different. But you still have to be disciplined in whatever way you choose to enter and exit your acquisition, your equities. You stick to those. And you don't have what's called FOMO. Don't worry about FOMO, fear of missing out. You're set to a set structure, and you're going to win some and you're going to lose some. I've had stocks where I've sold at $47 recently, and now it's at $52. Guess how much I care?
What about the people that sold Bitcoin at $3,000 and now it's at $50,000?
You didn't have a fundamental reason for doing that.
Great point.
If you have when you have fundamentals or a system behind you, whether it's for momentum trading or day trading, you don't care. You should not care. There's no FOMO. I've had stocks I've sold at 57, and now they're at 45. Do I feel like I won? No. It's just, I don't even care anymore. I don't care if it's gone up or gone down. The bottom line is it hit my target price, I'm happy because I made my money. Same thing on everything you do. The biggest issue I see with unsuccessful money managers is, when I say money man, I don't mean the professionals. People out there handling their own money. They get too involved in the emotion of it, the guessing. That's just a way of proving you don't have a system. What we're trying to teach here is a system, whether it involves fundamentals, chart trading, momentum, options, whatever it is, you have a system and you stick to it no matter what is asked. There's a great book out there that I focus my momentum trading on called Turtle Trader, The Complete Turtle Trader. This guy brought in 20 people and taught them how to trade futures. Only one stuck to the system 100%. So these are people that were actually literally given 7 figures in 1980s to go manage, and they still deviated. Guess how much I deviate?
Well, I know you. You're very disciplined.
Zero. I deviate zero, and I have zero FOMO. I have zero FOMO. So when it comes down to the point of we need to sit there and figure out when we're selling, once you pick your price, now also, every so often, you'll want to check and make sure your price is still correct. Because in this time period, things might have gotten worse for the company. It's no longer, before we had it worth 30 bucks. Maybe now it's down to, we have it worth 25. Oh boy. If the stock's above 25, get out of it. Now, the great news is, guys, when it comes to fundamentals, I also do what's called, I sell covered calls in order to generate income to sell stocks at prices that I want to sell them at.
So in layman's terms, I just went on Fidelity last week, just 4 days ago, and got approved or applied to sell covered calls, which means I already own the stocks. And Paul and I sat down today, and we're going to do a video on it. We already started making contracts for covered calls. So keep going, Paul. What's the point of these?
A covered call is you own the stock already. That's what makes it covered. You own the stock already. Let's say you own 100 shares of Apple. Okay? Because you have to have at least 100 shares of a company. That is one contract, 100 shares. Apple is currently selling for $135 a share. Okay? So it's currently at $135 a share. Now, let's say you've determined Apple is worth $150 a share. I'm not saying that's what it's worth. Let's say you say that. It's worth $150 a share. But you think it's going to take 6 months to get there. Okay, what you do is sell an Apple covered call at $150 a share for 6 months. That'll give you the right, that'll give somebody else the right to make you sell them Apple at $150. So let's go look at our page. Let's go look at our screen, our whole entire, we have a thing with Street Smart Edge on Schwab, which I like a lot. And I'm going to pull it up here for Apple. And I'm going to pull up calls. And 6 months from now is, we'll call it July 16th. Right now, if you look over here at $150 a share, the date is July 16th, and it's a call. $150 a share, somebody's paying $7 for that right.
Wow.
$7. So what they're going to tell you is, let me pull this up. To sell at $150, somebody will give you $7 per share. So on one contract, it's 100 shares, you will get $700 in your hand today. And if Apple goes above 150 on July 16th, you're going to lose the shares at 150. You'll make every dollar from 135 to 150. Everything above 150, you don't get to keep. But you still get the $700. You still get the $7 per share. That's in your hand no matter what.
So overnight, if the stock is at 147 when the market closes, and the next morning you wake up and it's at 154?
Friday at 4 p.m. Mm-hmm. Friday at 4 p.m. That's the date.
Then over the weekend, Disney announces something great. And
it's been settled. It's been settled on Friday.
Okay.
If it's below 150, you still keep the $7 a share, and you keep your shares. So anything from 135 to 150, you keep 100% of, plus your $7. Everything above 150, you still keep your $7, but you lose everything above 150. Again, it takes the discipline of saying, I think the stock's worth 150. Now, that's 6 months from now. A lot can happen in those 5 or 6 months. The company could get even better, and all of a sudden you're like, oh crap, I think it's worth 170. Okay, you can still sell this option and go do one for 170. You'll probably take a small hit and not get all the profit, but that's okay. That is the point. That's how we generate income and extra return when you have stocks and you know the price you want to sell them at. But you can't have FOMO. If this stock goes to 200, which is possible, You're gonna sit there and go, well, I got 150 plus my 7. I lost out on the extra $43. 150 plus 7 equals 157, and it went for 200. You lost out on $43. That is a risk. I like to do them shorter term. So let's look at an example at March 19th. Let's go to the 150 number here. This is gonna be so a lot closer in time and further out in price. It's gonna get you less money. So if you look right here, guys, 150 down here at the bottom is paying $1.14. $1.14 versus the $7. But now it's March 19th and not July. So now you're gonna get $1.14 on every share. But if it ends up above 150 in 37 days, you lose everything above 150, but you keep your $1.14. But of course, that has to be a 12% gain in the next 37 days. So one of the biggest things we teach in everything we do is you have to do what makes sense to you. As long as it's structured in some sort of system, whether it's fundamentals, options, hype stocks, momentum, I'm in favor of all of these. What I'm not in favor of is undisciplined approaches to those.
So what we're trying to say is, folks, I know that's a lot. Paul talks fast and he's on a higher level of intelligence than myself. But here's the layman's terms: is if all that might sound confusing, it very well might be. But you got to stick with us. This might take time. It's taken me years. I'm sitting on the show still learning. I'm learning options this morning with Paul. It's a much safer path if you have a process of learning as opposed to maybe just guessing. I just felt like Paul for decades that stocks was a guessing game. Will it go up? Will it go down? I'm thrilled that we came up with these 8 pillars and we now share this with our patrons and our followers. So just stick with this, guys. We're not certainly intending you watch this one time and boom, you got it. But the idea of when to sell is let's fundamentally figure out what would be a great time to sell, and then we can sell an option to make that small percentage above the market, make a little bit more money, and when it sells, that's great because we wanted to sell it at that point anyway. That was our target strike price that we came up with using fundamentals.
Guys, this took time for me. You might be like, well, I don't have time. You have time. Trust me when I say you've worked too hard to earn your money to not invest your time on how to manage it properly. All you have to do is beat the market by a few percentage points a year, and you will end up with so much more money. And somebody out there might be saying, well, that's not possible. It's very possible. The reason you won't be able to is because of discipline and lack of process. Everybody always says results matter. Process matters the most. Look at any successful person. They had a good process. They had ups and downs in the results, but they had a good process. That is what we're trying to teach here. We're trying to teach ways in which you make extra money here and there doing small things to give yourself an edge. Just like in blackjack. Card counters, in blackjack, the odds are like 50.5% for the house versus 49.5 for the person at the table. In card counting, it basically flips it. It flips it around, and that can make you tons and tons of money. That's what we're trying to do here. I'm trying to make sure that you get disciplined so you are the card counter. You're trying to sit there and figure out the right process. I don't care. If you're like, Paul, I hate fundamentals. Great. There are so many other ways, momentum, which we do, charts, which we do. If they speak to you, it works. I don't like charts. They didn't speak to me. Do I think they work? Absolutely. I love momentum trading. I am building out a whole system for myself and my family to do momentum trading with software. That's how much I love it. I love fundamentals. I love options. Those things speak to me. Charts did not. But Trader Mo, he loves charts. Trader Mo loves charts and he loves fundamentals. I don't think he likes momentum as much. But that's what the whole point is. It's about teaching. This is everything money. This is about every way we can sit there and talk about how we manage our money, whether it's in real estate, options, stocks, businesses, etc., saving, etc.
If this resonates with you, feel free to join our Patreon. The link is in the description below. Our Patreon has been exploding, over 850 members. We started it only three months ago, Paul. It's been incredible. There are different tiers you can join in. You will get our software. You will get our real estate calculator software. You will get our 8-pillar software. You get on the Discord channel to discuss these trades and these options with like-minded people from all over the world. It's completely, Paul, we learn from our patrons so much. They give us ideas. You can join a community and a family where we're trying to better ourselves together. And the small fee that you pay, you get all this stuff. You get the support.
And you get this.
Yes, you get the Everything
you get
Money.
Our software.
Everything Money website that analyzes all these companies and provides you data on 8 pillars. It's absolutely incredible. So yeah, join the Patreon. We'll see you there. And Paul, that's your take on when to sell. Interesting concept.
Thank you very much.
Thanks, guys. Make sure you tickle the thumbs up. Tickety tickle the thumbs up, and make sure you subscribe. We love you guys. Thanks for watching. Appreciate it.